Hello guys, welcome back for another video. Sorry for the delay. To recapture again what I've said before, I was a long-term view bullish, short-term bearish. So finally we did have actually follow through day. I will get back to this in a minute. So what I was watching last week is actually, since we made this couple days here, I was talking about like this days in here. So I was watching the low of this candle here, which is this day, and we made like 2 green days after, and I was watching it to see if we're gonna close below these days. I mean this day here and this day here, and actually we did. So I was bullish in here, and then I kind of closed my position trading QQQ since we closed below here. So this day actually here was kind of flagged for me, so I got out of the position. So the next thing I was watching is the low of this day here, and that actually didn't happen. So I was trading it day by day until we did had what's called a follow through day. For those who don't know what a follow through day is, I'm going to give you a quick review what a follow through day is. Follow through day occurs actually during a market correction when a major index closed significantly higher than previous day. So it's an indication of an uptrend, market reversing from the bottom, and it has to be at least 1.25% gain on above average volume. That's exactly what happened here. So so what does this tell me? It tells me that from here, what I should be watching, and what you guys should be watching, is we should not be closing at the low. So this day in here should not be taken out, meaning it should not have a red candle closing below of 354.85. If that happen, that means this follow through day is not valid anymore. Until then, so far everything is bullish. Kind of froze on me a little bit, and you can see that actually happened on the composite, SMH, and on all major actually indexes, Dow Jones, SPY. But if you notice with me on the weekly time frame, you'll notice that only actually the QQQ that actually closed above the 21 moving average. And I said this before. I said, look at here on the left, we've seen that in corrections, we've seen the market closes above and uses that 21 moving average as a support, and that's exactly what I was watching. I was watching to see if this week actually is going to close below it. Actually, we went down, but we never actually went down below the last week's low, and we kind of reversed in the middle of the week. So so going back to the daily, to what I was saying before, this candle actually threw me off, and I was thinking that, well, so this actually was my first red flag, since we take out these lows here, these 2 days here, and then I was looking for the market to take down this day here, but it actually didn't happen. That's why I take analysis day by day. So if you can tell me that we're still under a downtrend, since the price action and all the candlesticks below the 21, well below the 50 moving average, I kind of agree. But like I said before, if you read Williams O'Neill book, you'll find that most of the time when they did their statistics, they found that every time we kind of bottom, we do have follow through day, but the follow through day should not be taken out for the next couple of days. So the key here, so for the next couple of days, we should be holding in here until we closes above that 50 moving average. So that means we should not be trading a closing below that. There is a normal action side that we could actually be consolidating here. So consolidation can take this form. Let me show you, for example, what's what I mean by that. So the consolidation can be taken this form, or actually it can be taken this form here, and then we kind of reverse higher like that. An example, again, that's what will happen on the last follow through day, which actually happened back in 2020, and you can see it here on April 6th. Actually, it was this day. No, actually, it was this day. Yeah, follow through day was this day here. You can see that we went up, and then we kind of went down, correct a little bit, and then we jumped right up. So this here was a follow through day. Whenever follow through day happen, you have to wait to see if the market can reverse down from there, or it's gonna hold like it did back here and then keep going up. So that's, so usually a follow through day, it's your first indication that we're kind of bottoming, and then we're gonna go, the market is gonna reverse to the upside. But you have to wait and see if the market is gonna hold or going up, or it's gonna reverse to the bottom side. Overall, like I said before, and if you look at the market on a weekly time frame for a big time picture, you will see that we have a kind of a cup, and then we started making that handle here, and then so that's my kind of, I'm not biased, but I'm taking it day by day. So I'm just waiting for the market to kind of go sideways here a little bit, or see what it wants to do, or and then break to the upside. Two major indexes that I noticed, it's the QQQ and SMH. They are both the only ones that actually closed below the 21 moving average, which tells you that there is a relative strength in that sector. So what you should do, you should go back in those sectors and look for stocks that that have a relative strength. So above all, I'm still bullish until we start taking the low of this candle, and then it's not gonna look good after that. All right, so that is my 2 cents for the market. If you have any questions, you let me know. A couple stocks that I did actually found, and my screening is based on relative strength. A few of them are rely, and you can see, so during this correction that we had, you should have went and started looking on a daily basis on stocks that were holding above the 21 moving average. What I mean by that, you should put this stock, for example, and compare it to the index. So if I take Rely, for example, and compare it to the index, you saw we have the composite on the top here. Let's see, and then you have, and you have Rely in the bottom, so you can see. Let's bring it. So the moment that on the top on the QQQ starting to go down, look what was going on the Rely. It was going actually sideways. That's relative strength, and that's what I mean by when corrections happen and bear markets happen, pay attention to the stocks that are holding up. They're not selling off. They're doing something against what the market is doing. So for example, Rely is one of them. So, and it's been holding quite well on the monthly. It's pretty good. We have a lot of volume going on. Weekly time frame, it's about the same thing. Look, we went up. I mean, usually the market will break out and go about 20% up high. In this situation here, we went over 40%. We went sideways and then we broke off again. Another stock is VRT. Is another one here, and always, if it's hard for you to look for stocks, look for stock that actually gapping up above 10% on more than 300% volume. Like for example here, we jumped above 20% on a huge volume, and look for those stocks, and usually wait for them. You can even get in when the market started making new high, for example, like this day here, or you can wait for it to pull back close to the 21 moving average, and then you can get in there using the last low as a stop, or you can use this candle here, the low of this candle as a stop. So far it's this stock is pretty good as well. Another stock is ENET, another computer system stock. Another one is TNET, another stock that I mentioned in my previous videos. Another one that actually I was really watching for a while is Meta, aka Facebook. So another stock, this stock, if you watch with me what the stock did, it's moved over 200%. And then while the market was taking a hit, let's compare that again. Look what's going on. Look what happened on the top. So top was QQQ and the bottom is Facebook, which is called Meta. Meta was going sideways while the market was, QQQ was taking a little bit of a hit. So that just shows you relative strength on Meta. Another stock is CDNES, but those are the major one. Another one is called MANH, software appliance. The stock kind of pulled just a little bit, went sideways. We don't kind of have small tiny cup and a handle here, and then we're breaking out. Always look at the stock on the weekly, will tell you exactly what's going on. And another tip for you, just keep this on your write it down on your sticky notes. If you want to follow a trend, always use, so from here, for example, and once we're starting to make a new high, use the last low here as your stop loss. So if it's a more than 8%, for example, from here to here, That's about a 10%. Always reduce your position so you can get to that 8%. So you can like I say, so usually I do take 7-8% loss if I'm wrong in a position. But in this position, in this situation here, if it's from the last low, from here to out to the upside is like what's 12%. So I will kind of cut down my position so I can um, well, I forgot the word. Yeah, so I will reduce my position instead of getting 100% full position. So these are my tips for you, and I hope you get to learn from this. Subscribe if you find any value in this stock, and give me a like, and I'll see you soon next time. Bye bye.